Hello everyone, welcome back to Value Investor Bro or Value Investing Bro. Yes, I'm a value investor. I've been a value investor for a long time. I'm not the perfect value investor, but the reason for these videos is for me to share some of the reasons, some of the research that I do into the reasons whether I buy a company or not, and I thought it might help other people who are also value investors. Like I said though, I'm far from the perfect value investor, and if you have your own value investing strategy or ideas you want to share with people, feel free to do so in the comments section. So for this video, I want to share with you some of the research I did before I decided whether I would buy the company PayPal or not. So this is, first of all, a disclaimer saying that this video is only intended for educational or entertainment purposes only. It's not intended as financial advice. Please don't buy or sell the stock based on my video. As always, please do your own research. I'm sure that you know about the history of this company, but if you do want to read a brief history, you can stop the video here. What's the big deal? So these are the things from my research that I thought were the positives of this company. The fact they had first mover advantage. I know for myself, when I first started thinking about buying things online, there was that issue about the security. A lot of people were scared to hand over their credit card or personal information online. So the benefit of PayPal is that you don't have to do it. So they very quickly became a trusted and well-known portal for paying online, and therefore they were integrated into a lot of the e-commerce that you saw online. I can say from my own personal experience that yes, in the first 3, 4, 5 years of me buying things online, I very often used PayPal. They have a very high priority on security, as I suppose any company has to have if they want to deal in online transactions. They have a global reach. As someone that has lived outside the UK for many years, I can also be a testament to that, and the fact that they have many customers all over the globe is a big plus. They have a new CEO, so the share has basically not been doing very well in recent years since the pandemic bubble. So some people would say that this new CEO is a good thing because it will herald a new direction. For me, I would say it's a bit early for that. While we're talking about that, why don't we go on to the management? So the new CEO that I was talking about is called Alex Chriss. He worked at Intuit, and he was a well-respected tech guy there. He was heavily involved in a sector of Intuit that became a very big part of the company, and it grew a lot. Basically involved QuickBooks and a few other things. The thing for me is that in the interviews I've read with him so far, he talks about streamlining the business and making it more efficient, which I think is a good thing, and it will actually help the company. But for me, I wanted to hear more from him about future innovation, which I didn't hear. It's hard for me to work out his share ownership because he's only been the CEO for a short amount of time. The same with Jamie Miller. So they basically in November have employed a new CFO. This guy's been a CFO for many years for multiple companies, but not really companies in the tech sector. And then Peggy Alford, the Executive VP of Global Sales, she has basically been working there for a while, and she's leaving in January. Before that, she worked at Rent.com and the Chan Zuckerberg Initiative. She owns 2.4 million in shares. But yeah, I would say this has been quite a turnaround in the management. If Miss Alford is leaving, they've got a new CFO, a new CEO. For me, this is quite a lot of churn. Yes, you could say that maybe they are bringing in something amazing in the company, but like I said earlier, when I read the interviews from Alex Chris, he doesn't really inspire me that he's going to be coming in and really innovating. I mean, it seems like his main thing is to say about how they're going to use innovation to streamline and improve the efficiency, which is fair enough. That will help. But I feel there needs to be more, right? Because like I will say in future slides, the competition is really coming now on them. So I think they need to be able to innovate so they can start to stand out from the crowd. And for me, they're not really showing signs of doing this. So this new management so far have not really impressed me that much so far. Okay, so I ended up not buying this share, and these are the main reasons why from the research that I did. They have high fees. Now, like I said, for quite a while when I was buying things online, I would always use them and I wouldn't really think about it. But I started realizing that in quite a few situations, I am paying high fees, or the company that I am paying, they have to pay high fees, so that the cost of the thing that I want to buy from them is going up. I also realized when I was sending other people money, the fees I had to pay I thought were excessively high. So I've actually, from my own experience, I wouldn't say I've stopped using them, but I have greatly reduced my use of PayPal. And if I see an alternative, very often I will use the alternative. For me, I use things like Stripe a lot more than this particular company. So yeah, basically the competition means that this company are no longer the go-to online payment system. There's a lot of competition. Yes, I already said about Stripe. Of course, we've got Apple and Google that also have their own online payment services, and there are a lot of new competition that are coming out all the time. So for me, the competition, the fact they have high fees, they're going to have to reduce these high fees if you want to beat the competition. Either that, or they need to innovate, make themselves look really different from the competition, which I believe they're not really doing. For me, this industry right now is a race to the bottom, because everyone is going to have to undercut each other in order to be, have higher market share. So for me, this is not an industry, this is not a business I would like to go into. So yeah, basically rounding up, I would say they used to be a good investment back in the day, but I would say for me that is now long gone. They used to have the first mover advantage. They didn't really use that advantage that well. They've not really innovated. They've not really set themselves apart from the competition. And the competition is getting more and more every day. So, having said all of that, I'm now going to move across to a platform that I use every day on a regular basis. I think this is a really good platform if you're a value investor. I'm a value investor. I use it every day because it has the metrics, and I apologize if you can hear a very loud engine in the background. Sorry about that. But yeah, I find they have a lot of the very important value investing metrics here that really makes it easy if you're a value investor. So if you're interested in also having to go with this platform, I will leave a link in the description below. So you can see here that the rating out of 100 is 44. That basically will say that the underlying financial metrics are not really that great, kind of bordering on being mediocre. The ones I like the most are the return on investment capital, which for this one is the best one that they have out of all of these, but is still only rated good. At least it tells me the money they reinvest back into the business, is getting a reasonable return. The other one I really like is the cash growth, but as you can see, that is not very good at all. And for me, that shows it's not really a growing business. They don't really have the cash on hand for them to grow. They don't really have the cash on hand to hand back to shareholders. Yes, if this new CEO is able to increase efficiency, that might improve. But for me, at this moment, I would say that the underlying financial metrics are not really good enough for me to invest. And when you look at the margin of safety, you can see the share price and the fair value are very, very similar. So for me, there's not really enough of the potential growth. As a value investor, I want to buy things that are on a discount. Basically, this company is not based on the EPS they've had over recent years. The only thing that I would say, or the only things here that I would say are positive, are that all of these revenue and income charts seem pretty good. They seem to be on the whole going in the right direction. Although, and also the earnings as well. You can see when we look at earnings, we go to more earnings. It's very rare they have red here. So for me, this is really good. It shows they have the consistent earning reports, which is really good. In fact, they only have a couple of red on the entire page. So, but for me, the margin of safety, the underlying financial metrics, and the fact that, like I said earlier, the competition is just way too much. The competition is growing. I don't believe that PayPal has anything new or innovative over the competition, and this new CEO so far hasn't really said anything that will change my mind on that. If we do look at the share price over on TradingView, you can see, yes, they had this rise mainly because of the COVID situation where everyone was buying things online, but then that has basically then after that they've had a very big slump. And for me, the business doesn't really warrant that the price is going to really go up enough for it to be worth my while. So that would be my video. I hope you enjoyed it, and I hope it was helpful. And of course, if you have your own ideas about this company, I would love to hear it in the comment section below. Thank you for watching, and goodbye.